In this video, I will be speaking about BTC USD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market, then we will be moving to the on-chain data by looking at the exchange reserves. Now, this essentially shows how Bitcoins are moving on and off from exchanges. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that we have a market which is currently testing a quite strong level of previous monthly resistance, which is now turned support. Now, this was exactly the previous cycle high. From here, the previous bear market developed. Here, we had the halving, the market entered into a bull market. Then we had the bear market, which in my opinion ended here, and the market started rejecting exactly the previous cycle high. As I expected, in fact, I didn't speak about BTC USD when the market was here, explaining all the reasons for which we could expect a rejection away from this zone. And by the way, I will link in the description that previous analysis so you can go and check it out for more free education. Now, in a situation like this, even though everything looks pretty bullish, I do not expect the market to create new all-time highs before 2024. Only after 2024 and the next halving, only at that point I expect the market to print new potential all-time highs. Now, dropping down on the weekly time frame, what do we have? Well, from a weekly perspective, situation is quite clear. In all this impulse, there is one candle which is not related to the move, which is exactly this red candle here. What we can see is that this red candle indicates how we have previous weekly resistance, which is now turned support at this level, which we could expect the market to test, and we can already see the market rejecting to the upside. So in a situation like this, more bullish price action could be created away from this zone. Going down the daily time frame, what do we see? Well, from a daily perspective, first of all, we can see how we have a very strong impulse. Now, in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse. If we do that, we can see how we now have a 0.32 Fibonacci retracement lining up perfectly with this level here, which is previous daily resistance, which was acting as resistance all across here, turn support here, which now that the market is breaking to the upside, would once again be acting as support here. So if the market would go and retest this area of previous daily resistance turn support, actually historical previous resistance turn support, from here we would have quite good probabilities of seeing a potential rejection to the upside away from the area. Now, if we go and see what we have when it comes to the on-chain data, so how Bitcoins are moving on and off from exchanges, what we can see is that the black line is the price, the purple line is the amount of Bitcoins on exchanges. As the price was dropping, the amount of Bitcoins on exchanges was dropping even more aggressively. And now the price has been soaring again, we have just seen the amount of Bitcoins on exchanges continuing to remain either the same or slightly declining. Now, this shows massive illiquidity, so that if demand gets increased or if the amount of Bitcoins emitted into circulation gets cut in half, which is exactly what will happen with the next halving, at that point price should increase to accommodate for that new demand. Now, if we move back to the technical side of this market, what we can see is that if the market will move back to this area, this is a very good zone, inside of which, since we also have strong fundamentals, we could expect a potential rejection to the upside. So if the market will retrace to this zone, how we could be approaching a potential rejection to the upside? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the on-chain data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4-hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential rejection to the upside for the market to potentially complete this impulse correction and impulse pattern to the upside. Now, if you enjoyed this free analysis education and update, make sure that you drop a like and a comment. It really does support the creation of more free analysis education and updates for all of you, and I will see you in my next breakdown.